Welcome to this session, the first panel discussion session on during unlocking finance for sustainable food systems transformation. I'm really excited to be standing here and having the opportunity to discuss this very important subject with all of you. So to start off, I'm Vidvatta Sharma. I am a program manager at Shakti Sustainable Energy Foundation. Shakti is a regional climate foundation, and we've been working on the energy sector for the last 14 years. Over the last 2 years, we began our work on sustainable agriculture and land use, and over the course of these 2 years, I've had the opportunity to interact and partner with a lot of people in this room. So my first thanks to BKS and FOLU India for inviting us to be a part of this and leading this session. So just to set context as to what we hope to discuss as part of this discussion session today. I think one of the practices needed to transform agriculture in India, agriculture and food systems in India are largely well known. It's just at this point an implementation and adoption barrier more than a knowledge barrier as such. And adoption, incentivization constitutes of various different things. Of course, farmer behavior change is one of those. Helping knowledge percolate down to the ground is one of those. But financing is a big challenge. And financial systems of different kinds can play a huge role in creating enabling ecosystems which can eventually help farmers hedge risks and get over the initial adoption hesitancy that they might have as regards sustainable agriculture. Because as we all know, there are huge risks involved when farmers decide to transition from conventional resource-intensive practices to sustainable practices. And one of the most important is that gestation period, whether we talk about crop or livestock. An approximate 3 to 5 year period of gestation is natural with this transition, and helping farmers hedge risks during that time is very important if we are to scale up sustainable agriculture in a big way, from the pilot level initiatives that are ongoing right now to a large-scale mode of agriculture in India in general. So to that end, today's session aims at bringing together practitioners from various financial spaces, as it were, to discuss what kinds of financial system transformation we need to scale sustainable agriculture and food systems in general in India. So we would try to focus on 3 broad areas of thought within this conversation. One is, what kinds of finance do we need for sustainable and climate resilient food systems to scale? There are 4 or 5 buckets that we can talk about when it comes to financing. One is public financing, the other is private investments and private procurement. You have the new market-based mechanisms that are coming up in form of carbon credits and green credits. Then you have the institutional credit mechanisms and philanthropic capital. So how can all of these sources come together to create enabling ecosystems that can lead to scale within India? And that's the first question our panel discussion will touch upon. And the second is, do we need additional sources of quote-unquote climate finance? A recent study by Climate Policy Initiative says that only 4.3% of global climate finance goes into agri-food systems. So touching upon that, do we need climate finance specifically, or can we simply restructure and reorient existing financial systems to support sustainable agriculture? And if so, how should that support be designed? And the third question is, if we need new and innovative financial systems or financial instruments, what should they look like? How should these be designed? So of course the panel will reflect and deliberate upon all of these, but I would also like to open the floor to all of you to give inputs into this and help us understand how best to unlock finance for sustainable food systems transformation. With that, I would like to invite my panelists onto the dais. I will read out their bios and ask them to come on board. So, to start off with Dr. Reena Singh. Dr. Reena Singh is a senior fellow at Indian Council for Research on International Economic Relations, ICRIER. She holds a doctorate in microbiology and has been working on the execution and diffusion of greener, sustainable agriculture and wasteland solutions in India for over 20 years. Her work focuses on providing strategic inputs for defining research areas, policy analysis, value chain analysis, impact and vulnerability assessment, and implementation of projects addressing agriculture, climate change, and wasteland management. She has executed 11 research projects as lead principal investigator, and her project on restoration of Jarofix Yard at Chanderia Unit Hindustan Zinc Limited has received CII's award in 2021 for the most innovative environmental project. Currently, she is working on undertaking a comprehensive policy analysis for climate smart agriculture. Welcome, Dr. Reena. Now I would like to invite Mr. Minhaj Ameen. Mr. Minhaj Ameen is the Director of Strategic Operations, Finance and Administration at the Agroecology Fund and the Director of Bharat Agroecology Fund. Minhaj helps set up Bharat Agroecology Fund, which pools funds from funders and directs them to initiatives that are enabling the adoption of agroecology at scale. He engages with diverse stakeholders to help develop awareness of the potential of agroecology in India. Minhaj is passionate about promoting sustainable living to address the several planetary issues we face today, particularly climate change and biodiversity loss. He holds a degree in engineering and has earned an MBA from the Manchester Business School, UK. His conviction that humanity will truly thrive if we alleviate suffering for all human beings has led him to co-create and direct initiatives in renewable energy, solid waste management, afforestation, water conservation, agriculture, and education. He also helped set up the National Coalition for Natural Farming, the largest network of its kind to advance adoption of agroecology at scale. Welcome, Minhaj. I would now like to invite Partha Ghosh. Partha Ghosh leads the climate finance practice at MicroSave Consulting. He has over 13 years of combined experience in the financial services and management consulting industry. He has managed debt financing portfolios worth more than 85 million USD for various financial institutions. He has sectoral knowledge of lending to SMEs and corporations in the agriculture sector and financial intermediaries. He has structured a suite of innovative debt and mezzanine finance products while working with financial instruments. He has also advised banks and non-banking entities on setting up alternate banking channels focused on the low-income segments. Welcome, Partha. Now I would like to extend a welcome to Ram. Ram is the co-founder of Rangde, a pioneering peer-to-peer lending platform that strives to make credit affordable to rural communities. Rangde was started in 2008 when peer-to-peer lending was still in its nascency. In 2012, Ram was elected to the Ashoka Fellowship for Rangde's game-changing efforts to make credit affordable to financially excluded communities. Started as a non-profit, Rangde pivoted to an NBFC P2P in 2019, following RBI's regulations for peer-to-peer lending. Ram's vision is to harness the transformative power of technology and human-centered design, revolutionizing how communities invest in themselves. Welcome, Ram. And finally, I would like to welcome on stage Koyel Kumar Mandal. Koyel is the Chief of Programs at Shakti Foundation and provides strategic leadership and guidance to Shakti across programmatic verticals. He brings over 15 years of leadership experience in designing and implementing programs in climate resilient infrastructure and international climate finance, developing financial and policy ecosystems for decentralized renewable energy. Prior to joining Shakti, Koyel worked with the Institute for Financial Management and Research as head of programs, GIZ as a senior advisor, G20 Saudi Arabia as a policy expert. Koyel holds an MSc degree in Environmental Science and Policy from the University of Wisconsin, USA, a postgraduate diploma in Natural Resource Management from IIFM, Bhopal, and a BSc degree in Economics from St. Xavier's College, Kolkata. So thank you everyone for being with us today. And with that, I would like to initiate our panel discussion. I will be moderating today's discussion, so years to it. We will have an approximate 45-minute discussion on with the panelists and then open the floor up for a Q&A so that everyone else can participate and give their inputs as well. So, I would like to kick off the panel discussion by inviting Dr. Reena Singh to share her thoughts on certain issues pertaining to public finance specifically. Public finance continues to be the biggest source of financial support in India for agriculture. But however, given that at present public finance tends to favor conventional agriculture, how can policy frameworks be adjusted to incentivize sustainable practices? And what changes, of course, are needed in budgetary allocations to encourage a shift towards sustainability in agriculture? But more importantly, I would like you to reflect upon what measures can be implemented to ensure the feasibility of these interventions while also taking into account the impact on farmer income. How can policies be crafted to safeguard farmers from potential income losses during the shift to sustainable agriculture?
Yeah, thank you, Vidvatta, and good morning to all. And first of all, I would like to start that agriculture is actually is a state subject as per our constitution. But since agriculture has this food security thing that needs to be addressed, and it has a political relevance, so union budget, the central government, it spends extensive budget for agriculture. Everybody knows that they provide funds to agriculture and elites ministries. So there are three different ministries where union government is providing their funds. And we have done this estimation, and what we figured it out that it's only the 15% of the entire budget that was going to agriculture and allied sectors. They were actually coming under the category of green budget. So that means rest of the budget is basically the budget which is like 50%, 70% of the budget under this particular these three ministries is going for the safety nets, which it's basically includes like income support to the farmers, input support, and only 30% is going for the development activities. Of that 30%, it's only 15% is the thing which is going for the green. So that's the thing that I would like to first point it out. Secondly, it's not only these three ministries, agriculture, the animal husbandry, and the Ministry of Environment and Forest. Apart from that, the center is spending on two major subsidies, that is the fertilizer subsidies and the food subsidies. For food subsidies, particularly for the consumer sector, and the magnitude of the budget for these two subsidies is huge. It's 1.75 billion in 2023-24 I'm talking about, and for the food subsidy, and 1.25 billion for the fertilizer subsidy. That's quite huge. And 2021, when there was a COVID year, so it reached it's quite a lot. So when we have done that estimation for the 2 decades, what we have find it out like it has increased from 347 billion per year. This is the agri-food budget that is going. If we have calculated everything, like apart from those agriculture ministry's budget, the fertilizer subsidies, the food subsidies, and also if we include some other development activities like the road services that is connecting, and even the irrigation subsidies that the government is giving, and the budget which is going to the Manrega, for particularly only for agriculture, because in Manrega not all budget is going for the agriculture development activities. Some of it is going for other asset creation for the rurals. But if we talk about the agriculture, where they are going for the rainwater development and the rainwater harvesting system, the plantation activities, which is relevant to that particular sector. So it's 60 to 65% of that budget is going for agriculture activity. So we have done that analysis, and so it has increased from 347 billion per year, which is representing roughly 7.5% of the agriculture production value, to 7,572 billion in 2023-24, which is actually 16.6% of the total agriculture production value. So that's the range of budget which the government is spending on the agri-food support activities. Here I would like to point it out that we have not included the agriculture producer estimates, like whatever the farm it is giving to the farmers with for procuring the wheat and rice, because if we are calculating it, then we will have to subtract it out, the export tax and everything, so it's not included. It's basically the budgetary support that the government is giving for agri-food sector. But as we are seeing, it's only 15% in the agri department which is green, and fertilizer and food subsidy, the fertilizer subsidy and the food subsidy, they are basically not sustainable per se. We all know the degradation effects of the fertilizer. So it's basically the environmental degrading as well as the biodiversity degrading activity. So it's considered as a negative support. Similarly, for the food subsidy, yes, it is not going to the farmers, but it is going to the consumer. But because of that, the farmers, because they are only getting the support, that minimum support for wheat and rice, so they are practicing, and that's the reason the farmers, they are just going, and it's a problem in Punjab, Haryana, and particularly Western UP, where the farmers are continuously growing that particular thing. And we have done a pilot study in Punjab, so I will talk about particularly with respect to Punjab, where the rice, they are growing in 3.2 million hectares of 7.8 million gross cropped area, and 3.1 million hectare is basically the wheat. And the rice, when we do the, apart from the degradation issues with respect to fertilizer, it produces methane, we all know. And if we calculate the methane, then nitrous oxide is also going, and it is in the, when we are adding nitrogen fertilizers and nitrous oxide emissions, it is also doing. Then we have the crop residue burning, which is not only polluting the air, but also, it also gave the greenhouse gases, and also definitely the energy sources. So what we found out that with rice in Punjab, it's 5 tons per hectare, it is producing that much of, greenhouse gas emissions. So why? Because of all these subsidies, fertilizer subsidies, and the food subsidies which the government is giving. And apart from that, the Punjab government is giving the power subsidies. The entire, 67% of their agriculture budget is going to the power subsidy. And in that power part, 68% of the electricity is going only for paddy. This is what we have estimated, and after going and meeting with a lot of other departments. So once we did that calculation, it was coming somewhere around 30,000 rupees per hectare with respect to the rice cultivation. Now, with respect to it, the specific question of how to, we can do this kind of a reallocation. So what we would like to propose it, like, the subsidy which is going to paddy, like 30,000 per hectare, can we repurpose? We are not saying that you give additional fund. We understand, like, the central government, the state government, they have a limited budget, and maybe, they can definitely, they will elevate budget, but whatever is there, at least they should start repurposing. If that can be repurposed to some other crops, then probably the farmers, they would like to diversify. But again, with 30,000, I will say the profitability of the farmers will not reach, because one, with paddy, it is 90,000 per hectare, the profitability. But if we are trying to tell farmers, okay, switch to maize or some other crops, like in maize, it's just 22,000 or 23,000 per hectare. It's even 30,000 if you give, it is not going to be reaching. So we will definitely have to reallocate something to the developmental expenditure, like in the DARE budget, so that they are able to scale up some new good varieties, because currently the rice varieties are very good. They are yielding 6 tons per hectare, but the maize variety, if they are just yielding 2.9 tons per hectare, so it will never reach its the profitability part. Although the varieties are existing with PAU and other industries, but they need to be scaled up and they have to be given it to the farmer. If that is reached and the profitability is there, then they will reach the profitability part. Third thing that I would like to add here is, like, the carbon credit, which Vidvatta was also mentioning. If the farmers are shifting away from these, those high carbon intensive practices, they should be awarded, they should get those incentives, and if we are able to develop the models. Now, some states, they are developing They have started developing the mechanism. Gujarat is example, but it's happening only for the energy sector. So it's important that the government, they should, try to develop the mechanisms so that the industries, they come up, they can just start giving the incentive to the farmers. And first of all, the government should they have to understand that they are focusing on adaptation for agriculture sectors, but definitely the mitigation approach, if they add and try to add that as a target, then it might help. Thank you.
Thank you so much, Dr. Reena. And I think you raised a very important point that we could deliberate upon later, which is how do you, of course, Punjab, Haryana, and other states have been promoting crop diversification, but this aspect of the price differential in terms of profit margins is a big reason why farming communities are hesitant to switch. How do we address that gap is something that we could discuss at a later point. I would now like to move to Partha. Partha, banks and NBFCs, of course, play a significant role in supporting farmers to adopt innovative methods of farming. However, there is limited understanding of what constitutes climate smart or climate resilient agriculture within the financial services community itself. So, in your experience and with the work that you've been doing on climate smart agriculture, how can these institutions adapt their lending models to better support sustainable agriculture initiatives? And are there any specific financial products or instruments which can be designed to cater to the unique needs of sustainable agriculture? And lastly, what kinds of policy or regulatory signals and incentives do you think would be required to nudge institutions towards lending models for sustainable agriculture?
Hi, thank you Vidvatta for this opportunity, and good afternoon everyone. So the answer to the question whether financial institutions in India can address the requirement of climate smart agriculture, definitely they can, because in the past decade, the kind of development that India has made in digital public infrastructure, digital identity, the kind of technological progress that we have seen specifically in the fintech and the agri-tech sector, innovation is not a challenge for a country like India. So it might sound banal if I say that we need product innovation, process innovation, channel innovation, etc., because most of us know that innovation is there on ground. The avenues to implement those innovations are also on ground. So if I may take an example of product innovation. So most of us who are familiar with agriculture financing would know that Kisan Credit Card, an archaic kind of system of assessing agriculture production systems or values of agriculture production system using the scale of finance, kind of one size fits all product, is still the go-to product for most public sector banks who has the most amount of money to do that, do agriculture financing. Even private sector banks, when they were brought into the foray, they started KCC in a big way. Only a handful of private sector banks, and I was fortunate enough to work with one of them, came up with innovative financial products and solutions that would cater to specific segment. So product innovation is one thing where you should look at the crop, you should look at the livestock, you should look at the specific agroecological system and create schematic products which can be implemented at scale. So that is one thing. Now, to support this kind of innovation in product, we would also need innovations in channel and innovation in process. And fortunately, innovations in channel is something that India is delivering. We have a plethora of agri-tech companies who are able to measure and able to provide data to financial institutions on real-time basis on crop phenology, on diseases, pests, so that bankers can actually monitor the progress of the production systems or the projects that they have financed. And secondly, there are also aggregator models in terms of commercial food crop aggregators or livestock aggregators, and there are also institutions like Dwara e-registry and Cropin who can also give you a sense of whether your production systems are at risk from various natural or environmental hazards. So the process innovation would be coupled with product innovation and channel innovation. You have to partner with these fintechs, these agriculture fintechs, in real time to sort of deliver this solution. Now, one more innovation is probably required is capital innovation. So if we see in India, mostly the funding sources for banking, the commercial banks are more or less fixed. I mean, there are some innovative financial products and solutions that especially in the liability side, which NBFCs typically go through because capital is scarce for them and is costly for them. But banks usually have their established mechanism from the money market that doesn't incentivize them a lot to look at new investment opportunities in the climate smart agriculture. So had banks been borrowing from, say, an impact investor who would have the mandate to implement climate smart agriculture solution, they would do that. But that's not the case. So we have to then identify that who are the pioneers in the financial services sector who are in need of the capital, are able to innovate products, channels, and processes, and also are hungry for capital where they would tap in those kind of innovative agriculture, innovative equity or debt sources to implement this solution. So one quick example I'll go for is the National Agriculture Infrastructure Finance Facility. Right, it provides guarantee, it provides interest subvention, but you see NBFCs, they don't tap into this facility. They can very well do that. It is open to NBFCs, it is open to commercial banks, but only a few commercial banks, that too at the public sector, taps into this facility. Nobody goes for it, right? So what I'm saying that financial institution has to be more innovative when it comes to also drawing capital. Which brings me to the next question, that if financial institutions can innovate, can deliver on climate smart agriculture solution, why don't they do it? Well, the answer is obvious, but we need policy and regulatory push, right? Because if you see, even in the agriculture sector, had it not been a priority sector, if some of us are bankers here, let us ask ourselves an honest question, that if agriculture would not be under the priority sector lending guideline, how many of us would have actually gone ahead proactively created products and services for the agriculture sector, right? So first of all, the priority sector lending guideline should be informed by the policies of the government, and the policies of the government related to agriculture finance should be derived from the national mission for sustainable agriculture. Now if you look at the national mission for sustainable agriculture, there are several subcomponents which alludes to climate smart nature of it, right? The rain-fed system, for example, there are other like soil conservation, etc., which are components of the climate smart agriculture. They are there in that mission, but you see there is no linkage between the mission objectives, the mission implementation plan, and the financial institution. Why can't we have a Jandhan-like model which is applicable for financial inclusion in the country to drive the adoption of climate smart agriculture for and through the financial institutions? If those kind of policies would be driven at a central level, then only you can ask or coax someone like a Reserve Bank of India, then create sub-targets under the priority sector lending target. So today we have a 10% smallholder financing sub-target under the priority sector lending under agriculture, right? For small finance bank and for commercial banks. Why can't we have a climate smart agriculture sub-target within the PSA? So to sum it up, I would just make a couple of comments, as I say, to reiterate that there is enough scope for financial institutions in India to adopt the kind of innovations that are available to drive climate smart agriculture solution, but there is literally no incentive for them to do that because there is no policy push and there is no regulatory drive or supervision to do it. Yeah, that sums up my discourse. Thank you.
Thank you so much, Partha. That was a very insightful discussion. So I would now like to move on to Ram to further elaborate upon some of the challenges that you, from your experience, have seen in the NBFC space when it comes to lending for sustainable agriculture and livestock for smallholder farmers. And what, according to you, is the role that innovative financial instruments like P2P lending play in addressing these challenges and supporting the scale-up of sustainable agriculture in India? And what kind of further Partho's point, what kind of policy and regulatory measures do we need for innovative financial instruments for sustainable agriculture to pick up pace?
Yeah, thank you so much, and good afternoon, all of you. I'm not sure how many of you know what peer-to-peer lending is. I'll just quickly, give you a 30-second introduction. So this is a new model which is regulated by the Reserve Bank of India, and this came into existence in late 2017. What it really does is it allows an individual to lend to another individual. Now, while that happens, the person who is actually receiving the money, the Reserve Bank of India would monitor this and give the person who is borrowing money the same status as though the person who is borrowing from a bank. What does it mean? It means that the person who is borrowing gets a credit score in all the 4 credit bureaus in India, even though the person who is lending is an individual. So that's, in a nutshell, what peer-to-peer model is, and we are regulated by them. We've had a long journey, but a few years back, we were regulated by the Reserve Bank. In our experience, with I think, to be honest, just to give you, I'm sure all of you know this, but only 12.8% of India's eligible population have access to credit from a formal source. Now, this is the recent Findex, from the World Bank's Findex report. As a country, we have a long way to go. At Rangdev, what we've really done, we looked at this problem with a different lens. And the lens which we looked at is, one is the cost, and the other thing is choice. I think which is never debated enough. So if it is climate smart or even for livelihoods, cost does play a role, but more important than that, it's also the choice. The entire choice architecture when it comes to borrowing in India is blatantly missing when it comes to formal financial institutions. And what do I mean by choice architecture? The community's ability to choose how much, when, for how long, and on what terms they want to repay. So when you combine affordable credit with choice, then it becomes a game changer. So I think that's something which we've done. Again, we've just got started. But in our experience, we've seen some amazing results. Be it working with Shakti Foundation, Hubli for the flagship farm pond project or the FPO project. So most of the program, this is again a policy thing, right? So without naming the institutions, amazing institutions, right, who are working in this sector. But when it comes to choice, there is a problem, right? So either the communities get a term loan, so it's all decided, it's got no bearing with the crop cycle, with the community's actual need. And I think that's where we see, a massive failure, right, of credit creating the impact which we all expected to create. We also worked in the dairy, value chain. I think there was a talk about that a little bit earlier, and we've seen some amazing results there. So we work with Akshay Kalpa, which is an organic India's first organic dairy value chain. Super lean setup. A farmer and a spouse, they run a small dairy in a half-acre farm. I think the big difference which is made to them is the fact that they get credit when they really need it. So we give the credit at the farm gate. It's all digital. So that's what our experience has been, and we continue to work with Assam government and across the country. And I think the big, I would really would like to draw everyone's attention is that we really need a change in the service, right? So service design, right? So the service design when it comes to financial institutions, that needs to be revisited, because it should not be at the, we can't have the same service design which we have for mainstream farmers, right? So we need to have a differentiated service design. And also for the public sector banks, and that's the port of call for most of the communities. There's a lot of reliance on the branch manager, right? So I think we need to bring about some behavior change and really call it out, saying that it's one thing for RBI to say that, well, this is priority sector lending, you need to, but does that whole narrative, does it flow down all the way to the last mile, right? So I think I think it doesn't, right? So we all know how tough it is for the community at the last mile to borrow from a local financial institution. And I think, so that's briefly, and from a policy point of view, I think all I would say is that I think we have priority sector lending by the Reserve Bank of India for the banks, for the NBFCs, right? So they meet their obligation by lending into NBFCs. But we really don't know what happens after that, right? So it's very important to see the entire value chain and what value is it actually creating. And this also should be extended further to NBFCs, new age NBFCs like NBFC P2P, because the money is actually from one individual to the other. It's not coming from an institution. So priority sector can be included in this. Today, there's no mention of priority sector in NBFC P2Ps. So it would be great to introduce that. As a country, we have a long, long way to go.
Thank you so much, Ram. I think important points to take away from that discussion. So now I would like to move on to Minhaj and then Koyel, representing the philanthropic space in India. Philanthropy can play a catalytic role in supporting various elements across the various topics that have just been spoken about. And the flexibility that it brings is very important. So my question would be, how do you think, Minhaj, can philanthropic capital strategically address key challenges that have been brought up by other panelists in sustainable food systems transformation? And more importantly, what are the specific areas that it should prioritize for investment? And how do you think we should be strategically aligning ourselves or the philanthropic funding with broader sustainable agriculture goals at the national and subnational level? And I think most importantly, earlier speakers also spoke about the importance of local context and agroecology. How do you think agroecological considerations should be factored into various financial instruments that we have at present?
Good afternoon, everyone. Thank you, Vidvatta. I would like to first of all congratulate Professor Pingali for his presentation. I think that made our job a lot easier. A lot of the things that he recommended in his presentation are very strong features of agroecology, actually. And it's very heartening to see that even the scholarship in economics is now leading to the same conclusions. To answer your question, I work with many philanthropies, many civil society organizations, and one thing that I have realized is for the past so many years, while we are trying to work towards this transformation, we have been investing mostly on pilots and projects. And this is a systemic problem. It requires many, many elements to come together for it to happen on the ground. Now, what I mean by pilots is maybe an NGO or a CSO is interested in water. So they keep providing, doing water conservation efforts and making sure water is available for irrigation and so on. Some investors or philanthropies are interested in seeds. So seed work is going on across the country. But it's not coming together for the farmer. The farmer needs to see a new reality at a systemic level. And this is the most important thing that needs to happen if this transformation has to be accelerated. So one of the things that we are trying to focus on is how we can make that happen across the country using what I think many people mentioned before, converging many, many actors together to take part in that. One thing that is I don't know where to start because I have so much to say. Um, most important is looking at the entire country from a cluster perspective. So what does clusters mean? For me, it means, I think there was a mention of aligning landscape with governance structures. So in India, the governance structure is not just blocks, but also villages. How do we align 15, 20 villages together, form a cluster, and then ensure that everything that the farmer needs, be it seeds, be it water provision, be it capital, be it bio inputs, are made available to them for a sustained period. I think, Vidvatta, you mentioned 5 years. Our experience with RYSs is it could take even longer. It could take 7 years, it could take up to 10 years. So how does philanthropy work in a way where it ensures that one is that this capital is provided for a longer period, and it provides elements which are currently missing on the ground from a cluster perspective. Now, working with the government, there are many, many policies that are emerging on the ground. One is the National Mission on Natural Farming. I don't know how many of you are aware of that. It's a young initiative where the government is talking about clusters. Now, if we can align some of the work that philanthropy is doing with those clusters, that would be very, very beneficial. Also, recently the government came up with this idea of organic cooperatives. How do we ensure that that policy is then reflected on the ground in those clusters? And in terms of investments, as far as philanthropy funding is concerned, there are a few things that need to be addressed with those funding. One is to reduce risk. There are two types of risk which I think are very critical. One is the risk of the market. So how do we bring crop insurance into play and ensure that the farmers who are taking part in this transition are protected, because there's a risk involved from an insurance perspective, crop insurance perspective. The second is the vagaries of the market. Now, again, it's right now the farmers are dependent on the pricing in the market, and if the farmers are allowed to produce for a little longer through FPO processes and so on, then there is a possibility to reduce risk that the farmers face. We were mentioned about this pricing of onions going up and down, quite volatile. The second risk that I am very interested to reduce is the risk of, in this transition, of drudgery. Generally what happens is, when we talk about agroecology or moving towards non-intensive, non-chemical based agriculture, there is a lot of manual work involved. And sometimes that manual work is kind of romanticized. And in my opinion, and that work generally falls on women. So if you want to reduce risk for this transition, we need to make sure that there are innovations and interventions that reduce drudgery, particularly for women. Also, there was a mention of local procurement. I would go as far as saying, can we create awareness where local production, local consumption is enabled on those clusters at scale. And we talked about behavior change, but whenever I go and talk to philanthropies about consumer behavior change and investing in that, there is reluctance. But I think today we heard before also, that's a very important piece. Over 3 generations, we've become dependent in terms of palate, in terms of our diets, very much on wheat and rice. And if you want to move away from that, it's very important that consumers are made aware that there are better diets which will then create demand, and then the production systems will change accordingly. I will pause here. Thank you.
Thank you so much, Min. I think moving on to Koyel, I would like to ask you a similar question. What kind of areas do you think philanthropic capital should be best directed towards to address challenges that we're currently facing within sustainable agriculture, as well as do you think one of the areas that philanthropic capital should specifically be investing in is the building of institutions, whether strengthening existing ones or facilitating the creation of new institutions to support farmers in this transition?
Not working. Thank you. So I might end up asking more questions than answering a lot of your questions. And I think enough has been said, so I'm not going to add anything more to what has been said. I think all the topics have been covered pretty much. In terms of the role of philanthropy, let's start with the question you started with in terms of the need for finance in sustainable agriculture and land use. And I'm coming largely from, my experience has been on the energy domain of things. So there, the problem of sort of moving to more sustainable forms of production and consumption is different. You're largely dealing with new technologies that are more expensive. And the central financial question is therefore, how do you reduce the cost of these technologies? How do you increase adoption? And these are all expensive technologies because they are in a nascent stage, not commercialized yet. And therefore, if you look at the requirement of finance, when you talk about finance requirement for clean technology, you see massive numbers going into trillions of dollars and so on and so forth, right? In agriculture, I'm not sure if that's the case. We did a recent study. This was only for methane reduction in agriculture, including crops and livestock. There were around 40 odd interventions. Most of them are negative cost interventions, which is to say that they pay off for themselves over a period of time. So there might be an initial investment, but it pays off over a period of time. It's almost like energy efficiency, right? There's a capital investment, then it pays off. So, and then there are ones that are positive cost, for example, artificial insemination, sex-ordered semen, that has a positive cost. So if you add up all of this, at least for the emission reduction, methane reduction landscape, I'm not too sure if there's a requirement for additional finance over and above what would be required for business as usual agriculture growth, food security, and all of that. And when it comes to resilience in agriculture, I'm not very aware of studies that look at the cost implications of that. There might be cost implications. But I think that's a role for philanthropy, therefore, to figure out what the larger cost implication of moving to a more sustainable agriculture would mean. And is this finance requirement over and above business as usual? Because that will then help us as a community to make a clear case for climate finance, international climate finance in particular, impact investment, as was mentioned. So I think it will help us sharpen our argument as philanthropic community, as civil society ecosystem. That's point number one. Point number two, in terms of philanthropic role in unlocking capital, I think the hierarchy I would use here is, first I'll go back to what Dr. Reena said, right? Because I think that's the critical unlocking potential in agriculture, which is to remove economic barriers. Once you remove economic barriers, we'll see a lot of finance flow automatically happening. She mentioned one or two examples: fertilizer subsidy, the minimum support price, and the public distribution system. Those are two good examples. And if you just remove those barriers, you can see the power of markets automatically unleashing. You'll see a lot of capital movement towards sustainable agriculture. But it doesn't stop there. Agriculture markets, pricing, it didn't come up in the discussion so much, but there is no market in agriculture, so to speak. And once you have a proper pricing system in agriculture, once you let the markets work, you'll see amazing things happen. Minhaj mentioned hoarding. Hoarding is a bad word. There's a negative connotation to hoarding, but hoarding is a really good thing. It's like short selling in the finance sector. Someone sees an opportunity that the price is high now, they buy it, they hoard it, they sell it when the market is low. And therefore, they provide a service to all the customers, they provide a service to the producers, they provide a service to the economy as a whole. It's a double, triple thank you moment. Every person in the ecosystem is saying thank you because of that hoarder. But unfortunately, these are bad words in the Indian marketplace and the economy. And therefore, I think having a proper market system work for agriculture, I'm not saying that this will solve the problem, but it will help us identify where the problems lie. And then I think there's a role for government intervention once you understand where the real problem is. So I think there's a lot to be done in terms of unlocking the economic barriers. Then comes the role of new forms of capital, new sources of capital, right? And I think this will only come from an understanding of the financial needs, the particular cases for where finance is required, and the structuring therefore, and I think Partha and Ram both mentioned some of those. System of rice intensification, for example, or use of bio inputs. Now these are both labor intensive processes. It may not require additional finance, it might even be a lower requirement for finance compared to existing practices, but it's a financial requirement of a different kind. What Ram mentioned, the flexibility, the terms and conditions of the finance might be different. And that's where philanthropy comes into play. How can you absorb some of the risk and help the market deliver some of these more flexible products? Second is risk guarantee. Partha mentioned, already institutions available and providing risk guarantee, but artificial insemination, sex audit semen, there's a conception loss there. And there's a perception that if you go for it, you might actually lose, if there's a conception loss, which may or may not be true. But I think that's a role for risk capital. Can philanthropy come in and provide some of that risk capital? Where you're absorbing the risk of a farmer in case there is a yield loss or a productivity loss. So that's another role for philanthropy. And lastly, you mentioned institutional capability. Of course, there's a role of philanthropy. I mean, Minhaj mentioned this. There's undoubtedly a role for philanthropy. I'll just differentiate between whose capability are we building. I'd be very wary again of developing state capability because of what I said earlier. There's a role for government, and there's a role for government also to get out of where it's currently playing a role. So I think it's important to understand where the government needs to get out of and then strengthen areas where the government needs to play a role. So that's in terms of state capability. The second is market and the civil society ecosystem that we all operate in. And there, because of the nature of what we are talking about, new processes, new scientific understanding, movement, and it's a feedback loop. It's coming from both scientific institutions to agriculture as well as from practicing to the scientific community. And I think philanthropy has a good role to play there. And there are networks and institutions already working in that space, and we have a role to strengthen those institutions. So let me just stop there.
Thank you so much, Koyel. And I think you, with your comments, moved us into the second round of reflections that I would invite our panelists to deliberate upon. So in maybe 2 or 3 minutes, I would request all of our panelists from starting from Min to Koyel to reflect upon how this collaborative ecosystem can be created, because there is a lot that needs to be done, but silos is a big word within the community. How do you bring policy, communities, practitioners, civil society, philanthropy, and private sector together to kind of revolutionize the whole system so that sustainable agriculture can actually become more than just pilots? So, Min, then Dr. Reena, and others.
Can I just come in and say that?
Oh, yes, please. Yes, so just 2 minutes per person, and then we move on to the Q&A.
Yeah, let's be brief. So, one is we are all trying to do this transformation work, at least in our ecosystem, for a very long time. One has to ask why that is not happening. So some of the things that I have observed is, while we are working with diverse ecosystems, diverse socio-cultural contexts, we need a common approach for a country like India. And that doesn't exist right now. What that means is, for philanthropies, for government, for all stakeholders, for CSOs to have an approach which is farmer-centric, which allows to create systems and processes and solutions on the ground that addresses the needs of the farmer and enables the farmer to transition towards agroecological sort of practices more easily, more readily. And to do this, I think it's important that we create, I know there are so many coalitions now that, if you throw a stone, you will hit a coalition in this space, right? So, but how do we make sure that coalitions bring philanthropies, CSOs, what I call enablers. Enablers are people like consultants, research organizations. So if you don't include them, every time you have a new process and then it disrupts everything. Bring them together, and also people who are playing in the market space. People who are working on FPOs, on certification, on payment for ecosystem services, under one roof. This is an ambition which is very, very challenging, but I think the time has come to do that. And that's what we are intending to build in time to come. We are calling it the Coalition for Agroecological Transformations. And I think I heard the term here, the food system, something that is also being created by. So I think we need to bring those initiatives together on one platform. And then once we have that platform, there are a few things we have to achieve. One is a common framework as to what does it mean to provide services and solutions to the farmer so that the farmer can produce for diverse diets and so on and so forth with ease, with higher incomes. Second is measure of success. So far, the measure of success both for civil society and for philanthropy has been how many wells did I dig, or how many training programs did I do, instead of what kind of nutrition did I produce and what kind of well-being it resulted in for the farmers. So I think that's what we need. A common framework, common approach, and a common measuring system. And we are hoping to do this soon. We have invited many, and some of you in the room would also be part of that, actually all of you. What we want to make sure this time round is it's an inclusive approach. We don't want to leave anyone behind, and then collectively figure out what that common approach, common framework, and common measures would look like. Thank you.
Thank you so much. In the interest of time, if everyone could limit themselves to 1 minute. Sorry.
Yeah, for me, what I propose is like everybody should have a common framework on the farmer's profitability, because if that is not happening, then sustainable agriculture is not going to happen. So that's the basic thing. That's the thumb rule. If we keep on talking about sustainable agriculture, but if it is not at all giving any incentive to farmers, they won't move. Why we achieve green revolution? Because the entire government machinery, they were towards that green revolution. High yielding varieties of wheat and rice came, mechanization came, fertilizer subsidy was there. Then the minimum support price was given to farmers for producing wheat and rice, so that the government is purchasing them. That's the reason we were able to achieve it. Now, if we have to achieve revolution on sustainable agriculture, similar approach has to be done. We have schemes, limited schemes, like natural farming, just 400 crores a scheme, as compared to other subsidies. So if the farmers are not getting the profitability, they will not do it. We have recently visited Namami Ganga site. They were going for the organic farming, but they were getting reduced yield, 25%. If they are getting the premium price, why not they will go for it? They will definitely go for it. Thank you.
And I think our guest speakers have summed it up quite well from a ecosystem perspective, how all of us need to come together and play a role. I would include 2 points. One is focus on financial resilience of the farmers that you are working with, and also ensure digital inclusion, because if they are to inform themselves well, they are to acquaint themselves with the latest technology, reap the benefit of the sort of digital inclusion of the digital technologies that are available. Focus on those 2 points as well in your programs. Thank you.
I can skip if you want. I think this is where the philanthropic capital can play a key role in getting the public-private stakeholders together. I think this needs to be done with the missionary zeal. I think the problem is the speed versus what the need is. So we really need to accelerate, and the philanthropic capital can definitely play a role.
Just quickly, I'll differentiate between collaboration by design and collaboration by discovery. I think once you let markets and prices sort of play their role, you'll see a lot of collaboration by discovery. It will be bottom up, there'll be a lot of collaborations that form. And then there is collaboration by design. How do you, because there are market failures, how do you bring these actors together? So again, not answering your question, but adding another layer of question. I think the role for us is to therefore understand where collaboration is useful by design and where collaboration is useful by discovery.
Thank you so much, Koyel. So now I would like to open the floor for Q&A, and sir, starting with you.
So I can speak loud enough. My question is, each of you represent a philanthropy or a financing, network. What is, I'm asking you all the panelists, maybe just a one sentence, what is the one policy you're working on to change in Government of India? Because you all think it's important. So what is one policy each of you are working on to change? Would like? No, they're already working on. Not would like. Would like to the list is endless. So what is the one main policy you would want to, what are you working on to change? Just the name, like so everybody knows.
Yeah, the list would be very long, but so just to one sentence, what we are trying to do right now is to figure out how we.
I'm sorry for this, but what policy are you trying to change?
Yes. But this is the policy of defining clusters for the National Mission on Natural Farming, and can they align with the cluster idea, which is large enough to provide all the services that the farmer needs.
So what I will say is direct beneficiary transfer. Like we are, able to club all the subsidies that is being given under like fertilizer, food, and everything, and give it to the farmers. And it's for the farmer; they will just spend.
Our organization, MicroSave Consulting, is implementing a whole, 360-degree agriculture stack, digital stack for the government of Bihar, integrating all sorts of services, including financial and non-financial services for the smallholder farmers in Bihar.
That's not the question. See, I'm sorry for this. As a farmers organization, very important for us. Not what you're doing. What policy you're trying to change.
So this is a policy where so this is a digital public infrastructure we are promoting as a policy, right? The DPI will ensure certain amount of facilitation at the market level. That's what we are envisaging. Thank you.
I think I just mentioned this earlier, but I'll repeat. So we are looking at introducing priority sector lending under NBFC P2P. That's critical.
We have supported Dr. Reena and team to do some of that work. So I think one is what she mentioned, but largely also looking at the policy landscape itself and trying to then figure out, to answer your question, I don't have the answer right now, but I hope what Dr. Reena and Dr. Gulati together are doing will give us some answers to which are the important policies we should look at in the first place.
I think just to add on to what Koyel mentioned, we're also working to what Dr. Pingali and group are also doing, kind of come up with a true cost assessment of food systems so that we can come to a green bonus of sorts where farmers can be incentivized to switch to sustainable agriculture, because social, institutional, economic factors are all being calculated and quantified for the different practices. So that's the work we're doing.
Santosh Chan Pasi, I am a public health nutritionist from Delhi University. I think we all know that International Year of the Millets 2023, on the basis of what, at India's behest, it is now almost ending. On an average, we can say that there has been a buzzword that millets should be consumed, but to my mind, neither the production nor the consumption would have shown much change in India, and leave aside around the world. To my mind, what I would like to say that for financing farmers or giving incentives for growing millets is one, which is very important. R&D in millets is another. And also the local level small scale industries for semi-processing of millets. millet cost is much higher than wheat, and I wouldn't say with rice. Rice may be, depending upon the quality, but then I think the rice has a positive attribute of quickness and ease in cooking. If I don't have much time, I'll go in for that. So I think millet processing has to be done so that drudgery for the household level women is reduced, and also its cost also. Millets have to be brought down, cost of millets has to be brought down, whatever the way policies are made for that. Thank you.
Thank you so much. I think someone in the back and then sir and
Okay.
followed by.
So, in the interest of time, again, I don't want to be the person standing between lunch and all of you. I'll ask questions, and if we can answer them now, otherwise we can take them during lunch as well. So, a bit of a background, I also have the opportunity to mentor 7 farmer producer companies with the government of Himachal Pradesh based on natural farming. We created a sustainable food systems platform for natural farming, also included blended finance to bring about food systems transformation. So I welcome all of you to take a deeper look at what all of this is. Based on my experience also as a farmer in Himachal Pradesh, I had a few questions on both these backgrounds. Partha, you had mentioned something about the archaic nature of KCC. I would beg to disagree. Okay, it's a safety net for all the farmers because of the way it is available. There's an issue on how the service delivery happens, which is what Ram is alluding to. The RRB banker is very pressured today. So it is something that we should consider in terms of innovating rather than saying that it's just archaic. I have a message here I can show you as a farmer. My premium was 3,600 and the government paid 23,040 rupees to HDFC Ergo in response to that. For Ram, the point I have is that congratulations on this difficult journey with RBI, getting all the money together to be eligible for P2P. With the FPCs, we face an issue. How do we get the funds across? Even today, it's very challenging for FPCs to access funds. How would you then recommend also innovating an eye-to-eye, institution-to-institution mechanism to innovate and support FPCs at that stage? Koyel, to you, my point is you're very right, bang on saying tech is expensive, yeah? And we are talking about using tech to solve the problems of smallholders. Come on, who are we kidding? We have this term in our village, we call it Mehenga Khilona. It means expensive toy. All the photovoltaics, all the drones, they go bad. And then you have the rural kids playing with the rotors and all of that. No one knows what to do with that waste. So how do we take a look at sustainability from a really deep perspective and find out appropriate ways to finance tech which actually brings change? Some of these tech is actually at the hands of the rural farmers themselves. They innovate, create small tools. You don't need to import mine in China or Africa, create photovoltaics and bring it to farmers saying we're solving it. So yeah, I'm getting those looks now. So
just in the interest of time, I'll just raise all of the questions so that you can also reach out to panelists later. But sir, you had a question followed by you and then.
I'll again would like to bring your focus to landscape, because if we are talking about unlocking finance for sustainable food system, what is the boundary that we are setting? Because food systems, or especially agriculture, works in a larger ecosystem. Where is the finance for forest management? Where is the finance for common land management? Where is the finance for water management? Because these are all going to affect agricultural productivity and sustainability of that. So I think we need to look at broader, landscape rather than only looking at what is going into agriculture.
Fair enough.
Thank you very much. Just to Reena ji, you mentioned about 30,000 rupees as power subsidy that is going into the farmers.
No, total subsidies.
That's a total subsidy.
Yeah, it includes fertilizer subsidy, it also includes the irrigation subsidy and the power subsidy.
Now just coming to that, slightly more information I'd like to seek or even give a suggestion. That is not only we should work on the subsidy or 30,000 to be given, how we can increase the productivity and income from the crop itself will be very critical. I think that input is still missing in millets and other coarse grains. So that is one very important aspect on which agriculture practices and variety development needs further attention on it. Second point that I have is, I think instead of working crop-wise, I suggest that we should work on a mixed cropping or cropping system than an individual crop. Over a period of time in a year, what should be my cropping system so that I can enhance my income than only on individual crop. Similarly, I think if we can integrate mixed farming, thus including livestock, and then work out the farmer income and production system, that will be better to integrate, and at the same time will be more acceptable to the farmers, because livestock is an integral part of agriculture. Lot many byproducts of agriculture are used for livestock. So we should try to consider those also, and so that systemic approach, that's mixed cropping or cropping system or the mixed farming need to be considered than only individual crop.
Thank you. Sir?
My name is N.M. Prusti. I have two questions. One is, can we look at the policy, especially the CSR policy, that CSR resource can be also directed towards supporting the farmer producer companies? Because by legislation, by law, the CSR money should go to non-profit, whereas APC is a for-profit entity. So this kind of fundamental change is required. My second question is that what are the kind of unlocking finance instruments for bringing a market system transformation, which in my opinion is an important part of sustainable food system transformation?
Thank you. Just one last question and then 1 minute for people. Not you, Karthik. The person in the back.
Hi, I'm Ruchira from CEW. So we've been looking at repurposing input support for agriculture, and maybe this is a pet for Dr. Reena. So we see that there are many different policies like Pani Bachao, Paisa Kamao, or Bhavantar, or the Kalya scheme, which are being adopted by different states and with varying levels of success in terms of achieving their target outcomes. So what, according to you, is the need of the hour for some of these to scale up, to design them better in the first place, scale them up, converge the outcomes, and both at the state and the union level, how can we repurpose support and who can drive this shift?
Thank you so much. Yes, Dr. Reena, any response?
We have seen, like in Haryana, these crop diversification schemes are, getting promoted, and there the supply chain mechanism is also well developed. So if we have to recommend all these things, then the supply chain mechanism has to be well established. For example, the farmers are getting 1,000 rupees just like, if the farmer is collecting, the residues from their fields. So what they do, they just tie up with the balers come, they just give it to the that particular person, and then that residues, it is going to the market for different feed, like for the feed, like majorly going to Rajasthan for the fodder. So that is one thing. Like if this mechanism is not well established, then even if there have schemes, there will not be somebody who will be picking it up. Secondly, if we are going for the diversification, for example, if we are recommending like shift from paddy to maize, but if there is no incentives even for the market, like the industries, then why they will come and they will just take up their produce? They will not. Like if the government is giving like the performance linked incentives to those industries, like if they can be linked up with we have this biofuel target we have to achieve, like even from the food sector. So it's just the maize crop which is coming to our mind, which can actually fulfill that biofuel target, like B20 blending target. So we have to have all those mechanisms established, only then it will take up. And definitely, yes, the productivity of other competing crops, that is important, because high yielding varieties are very much there with respect to wheat and rice. But if we, whenever we are talking to the farmers, they're not getting good varieties which is matching the yield of the paddy. So if they are producing less, even if they have the MSP which is comparable to paddy, their profitability will be little lesser. So there are agriculture universities, they have the varieties, but they are not scaled up enough. This is what I will say. Even in agriculture universities, major, whenever we are just going through what are the release varieties, it's majorly wheat and rice, which are the improved varieties which are being. And otherwise, the private sector, the horticulture, it's entire private sector who is delivering it. So this is what I can say.
Thank you so much, Dr. Reena. I think we're at exact 1:30, so I would request all the other panelists to please and speakers, participants to please reach out to the panelists over lunch for further questions or discussions. Thank you so much for joining us today for this session, and we hope to keep working with all of you soon. Thank you.
Thank you, panelists and Vidvatta. We are now breaking for the lunch. It is going to be a little quick lunch, sorry for that. I request you to reassemble by 2:15 exactly. And by the time you come back, this room would have divided into 3 compartments. And parallel sessions are going to happen. One session, session 1 and session 2 are going to happen in these 2 rooms. And you must have already got allocations into which session you are going. It's based on your request. And somewhere we have taken a liberty to allocate you based on your expertise, we expect as well. If anyone doesn't have any allocations, please contact any of us or just feel free to move into any free rooms. Wish you a good lunch.